Please welcome to the show Scott Bauer, CEO of Prosper Trading Academy. Scott, let's get right to it.
All right.
Starting off, Bitcoin. Big moves overnight. You know, we've been talking about this 10,000 level, staying above it. We are at some pretty good numbers. Now, all of a sudden, big sell-off here happening last night.
Big sell-off. I actually dipped below 10,000 briefly. And, you know, when Bitcoin is out of the news is when it usually does best. And obviously there was a lot of pressure end of the week with President Trump coming out, some other big names coming out calling for more regulation with Libra. So just a lot of pressure here. But I believe that the momentum is still to the upside if it can hold this 10,000 number. Yes, 10,000 is one of those big round numbers. It doesn't mean a lot in terms of technical support, but if it holds there, it probably withstands this latest knock and probably see a rally back.
So what I found interesting here, right, is the biggest issue, if you go back a couple of months, was no regulation. That's why this can't work as a product offering. Now all of a sudden, you get Facebook coming with Libra. We start seeing, let's say, a bit more general acceptance and the call for regulation, but one Trump tweet seems to really push down that marketplace. I agree with this 10,000 level. It seems though Bitcoin has been able to withstand some of these levels traditionally, whether they've been at lower levels and they've worked its way up there. Question here though is, like you said, 10,000 is a round number. If this starts to dip a little bit below, gets to that 9.5 range, is that enough to actually push it down further, or do you start to see that opportunity for that buying cycle to come back in again?
So there's two sides of that, because there's the psychology of the big round number, and that if it dips below there, you may start to see retail people come in and say, oh no, here we go again, we're dipping down. But it's the institutional side of things that probably come in and say, all right, buying opportunity.
Yeah, okay. Well, I'm going to leave Bitcoin there. Right. I know Oliver's got to have it on his radar because I think every time we talk, it's the big one that's on there. I think I want to take the next one is going into the US dollar. So for me, the dollar sort of is this sort of unforgotten item that's out here. And what I mean by that is that for the most part, people are talking interest rate cuts. We're starting to talk earnings, but no one seems to be really talking about the dollar. And if there's one product that I see or asset that seems to have withstand anything in the marketplace, it seems to be this dollar over the last year and a half.
No question about it. And I think, that, JB, that's almost the beauty of it, is that it's a little bit been behind the scenes. So you're right, it has withstood everything we've seen. It has been a little bit weaker recently, which is probably the cause for gold going up. But you know, this has withstood. And bottom line is, this is the go-to currency of the world right now, and there's no other place to go. So it's a great place to be. I think that whatever minor sell-off that we've seen over the last 2 to 3 weeks or so is probably short-lived, and I would see a rally back here.
So I guess that's my question is, I'm looking here, and we're going to get to the rest of the foreign currencies and to treasuries. If you're looking here at this market right now, can we live in a market of 2.1% treasury and a dollar on its way back up to 97, even 98?
Well, we are. You know, if you ask me to predict what's going to happen 18 months from now, I'd say no, there has to be that divergence. But with the way the market is trading right now, at least through the summer and probably well into the third quarter, I think, yes, we can.
All right, so Scott, I want to shift our gears a little bit. I'm going to go over to basically the Asia area. Japan closed, so not really a lot to talk about from a yen's perspective, but I want to go to the Australian dollar, because I think what's interesting about the Australian dollars, the market has been pretty much hit really hard. They were one of the first governments to come out to cut and put in easing.
That's right.
However, they have a huge exposure or relationship with China.
Biggest one.
Bad numbers come out of there. But actually, Australian dollar doing okay. Are we at a point here where we've found some settling of the bottom, and now perhaps we can start to see it start to lift back up a little bit?
I think so. And if you look at the chart on the Aussie dollar here, it's pretty range bound. And like you said, with the news that came out last night, I would have expected the Aussie dollar to actually be down a little bit, and it really held its own. So it is pretty range bound right here. It seems to have found a bottom a few weeks ago, or actually a few months ago, and it does correlate with the Chinese data that comes out. I mean, they are so tightly intertwined, and we'll have to see going forward here, but it is pretty range bound.
All right, so I'm going to go to a different commonwealth of the UK. I'm going to go all the way over to Britain. I want to look at it because I think it's interesting looking at the British pound. Absolutely. The only positive news it feels like came out of Britain this whole year was the wedding. Right? I mean, that's it. I mean, now you're turning around looking here again. It's down, getting hit hard again. I guess my question for the dollar, or for the British pound here is there anything with this Brexit news coming through, do we have to wait to see who this prime minister is going to be? Is that going to help it? Or are we looking right now at basically a pound that is just going to continue to have pressure on the downward side?
So the bottom line is whatever market you look at, markets don't like uncertainty. Markets trade poorly with uncertainty. And from Brexit to the new prime minister to the poor economic conditions and the poor economic reports that we've seen out of there, that has taken its toll on the pound. And until there's some clarity with something, with anything, whether it's with Brexit, the new prime minister, there's going to be continued pressure.
All right, so I want to shift our focus here a little bit more away from currencies, but to treasuries, right? A lot of pressure coming off of there. We were already talking about it. I'm looking here at the 10-year. 10-year sitting there already, 2.1. Is 2.1 a realistic spot for us to be in as we're going into earnings season?
I think it's a no man's land, actually.
Okay.
I would like to see us back up around 230 or so.
Oh, wow, okay.
I mean, I don't know that we get there, but I think that for the overall marketplace is kind of the safe haven, is the Goldilocks area, if you will, right now. And if you look where we are at 210, that's almost right in the midst, that 50% retracement or 50% point between 230 and the lows that we saw of about 191 or so. So 210, you know, it's no man's land. I think if the banks perform really well, and we saw some good numbers out of Citi already, if the banks perform really well and we get decent earnings, I'm not saying blowout earnings, I would actually look for the treasuries, the yields to rally.
So as you're looking at these yields, are you concerned? A lot of talk was on Friday of finally getting back steepening in the yield curve, right? Everyone talking, here it comes, blah, blah, blah. But then all of a sudden it sold off, right? So it actually went back to almost unchanged where it was. Do you see, again, looking at the earnings season here, could we start to see, is that steepening needed to get in here? Or can we live in this world of near inversion?
We don't need to see that steepening.
Right.
You know, it's that shock value to the system. Every time you see something for the first time, it's negative, right? It's that unknown. So when we saw all of the issues with the inversion and all of the media hype, quite frankly, behind it, that took its toll. And now it's almost become commonplace or happenstance. So do we need the steepening? No. Do we want to see it really invert? No. But right in line or a small inversion, I think is totally fine.
All right, so I want to also look here at last week because we actually had 3 auctions come out, right? So I thought it was interesting. Your first auction was a 3-month or 3-year auction, which is actually pretty solid. Then you turned around there and you had a 10-year, which was good, but the 30 was dismal. So going to that yield, that's the yield curve question here. What should we? I mean, should we be focusing on these auctions that much more as retail traders, or is that just sort of news to be on the side?
I think it's news to be on the side. Okay. Again, and I hate to beat the same drum here, but it's so difficult to pick apart every micro piece of news that comes out. Every auction in this case, every time the yields become a teeny bit inverted, yet due to the heightened awareness of it from the retail space to our show right here, the heightened awareness, it makes everybody on edge. So I think it's okay. I think, again, you have to be able to see the forest beyond the trees here, and you have to be able to look at more macro data and not break everything down into the minute.
All right, so Scott, before I let you go, you already highlighted some bank earnings coming through. What else is on your radar? And if we're looking at, especially from the impact to the treasury markets, is there anything this week? Is the retail sales number going to be something that's interesting? Or is there something else you're looking at? Or are you kind of putting the rates question to the side?
I'd say rates are always very important, but retail sales, I think this is going to be a big one, especially coming off of what we saw out of China last night. China's numbers overall, not great, but their retail component was actually pretty good. I think we need to see at least a flat number and not a deceleration. If we get a pretty decent number, a flat number here, that to me, along with the banks, that could really lead this earnings season very positively and maybe take us up to that next level.
Wow. Well, thank you very much, Scott, for taking the time to come in the office, help me through co-hosting on the show here today. There's a ton of knowledge coming from you, everybody. That's Scott Bauer, CEO of Prosper Trading Academy, joining us here today. But don't go anywhere right now, because guess what? We have some